So, guys, welcome to Study Mat classes. Let's start the first chapter of Inter Audit. So, what is audit? So, basically, audit is independent examination of the financial statements of an entity, whether profit oriented or not. Basically, what does this mean? Basically, audit is independent examination. What is independence? Basically, independence is basically a state of mind in which auditor is not subordinate to the decisions, to the judgment of any other person who might have engaged him. So basically, auditor should be independent of the entity. He should not be under any coercion, undue influence of any other person. Right. So this is one of the major points you have to keep in mind throughout. Right. So audit can be conducted of any type of entity. It may be a small entity, it may be a large entity, it does not matter. Because basically conducting auditors have several benefits that benefit the firms, right? To a huge extent. Because when you produce the financial statements, the audited financial statement in front of any bank, then the lenders can place greater reliance that on the financial statements of the entity, right? So this is one of the major points. Um, Audit can be conducted of any type of entity, whether small, big legal size, and when examination is conducted to express a opinion thereon. So basically, the most important thing is to express opinion after conducting the audit. The auditor basically expresses opinion. There are three types of opinion. I can give you a brief idea. Like one is unmodified opinion, and other is modified opinion, and other is disclaimer of opinion. Right? So three type of opinion he can issue, conduct basically after examining and after examining the financial statements and the necessary audit evidence which he obtains. On the basis of that, he basically issues the opinion. So let's read. An audit is independent examination of financial information of entity, whether profit-oriented or not, and irrespective of its size or legal form, when such examination is conducted with a view to express opinion on financial statements. Audit is independent examination of the financial statements. Independence implies judgment is not subordinate to wishes, direction of any other person who might have engaged him. The auditor should be independent of the entity whose financial statements are subject to audit so that he can form opinion without being affected by any influence. Consider, for example, a person who requests his brother, a CA, to audit accounts of his proprietary concern and issue a report. Can CA audit accounts of concern in which his brother is sole proprietor? No, he cannot. Because there is a relationship by birth between CA and his brother. He will be subject to influence from his brother. The entity whose financial information is audited need not be necessarily be profit-oriented entity, like in case of business. It can be a non-profit oriented organization like NGO, charitable trust. Audit can be undertaken in respect of any type of organization, small, medium, large. It can be conducted for any entity irrespective of legal structure, such as entity may be proprietary concern, partnership firm, LLP, private company, society trust. The purpose of audit is to express opinion on the financial statements.